Good morning. We're half an hour away from the market open on Thursday, August 8th. We're in a very high volatility environment, so we want to be careful about making conclusions about what futures and swings when we open in the morning, because now especially that's not necessarily the direction that markets are going to go. So let's see how our futures are moving, and then we'll see if it's significant or not. But again, we just want to be careful and make sure that we don't draw any conclusions uh, based on movement just because things are a little bit elevated because we are in that heightened volatility environment. So S&P 500 up 75 basis points, which is generally we'd call that non-random, but in this environment, I don't know, because our volatility is way up. Let's take a look, see where our volatility is. Yeah, we're still in the mid 20s. That's really high. So before we were talking about down here when we were around 12 or 13 in the VIX, we're talking about 1/3 of a percentage point is roughly random. But now we're about double where we're like actually more than double where we normally are on the VIX. So I would call at least 75 plus basis points before I would consider it non-random. And we're on the cusp of that with the S&P 500. NASDAQ is up more, about 1%, 1.1%. And uh, but again, right now in a high volatility environment, it's hard to say exactly what is random, what isn't random. Dow Jones is a lot less, about 40 basis points. So for now, I'm going to consider that random unless I look around and I see something significant that tells me otherwise. So let's take a look where we're S&P 500 is opening. Looks like we got a little bit of a bounce. Yeah, you can see that based on where we're open, it's not like we're opening in the upper half of this bar or near the top of this bar, sort of like we did yesterday. So right now, for now, I'm just going to call that random. Let's see what that looks like on a intraday basis. Okay, so we got a big movement upwards right at 5:30. So there must have been a report that we're reacting to. So let's take a quick look at that. We haven't looked at economic reports for a while because right in this environment, they're just not hugely important. But looks like we got jobless claims. So for us to move upwards, I don't know that it would be people anticipating rate cuts because we were pricing in 100% in September. So unless we feel like that we're going to move to 50 basis points, but that's a little nuts. But I keep saying that. So what what is rational and good for the markets versus what the markets actually does are two different things. What the Fed should do versus what the Fed is actually going to do are two different things. So I may have an opinion about what the policy should be, but that doesn't necessarily match up with what the Fed is actually going to do. So in other words, I might say something like, "Oh, this is what the Fed should do," based on my many years. That's exactly what I've been tracking my entire career. But what they will actually do is very different because they have a lot of things that they they are political, even though they say they're not political, but they're not political in a way that's in your face. It's going to be obvious. They don't want to be on the headline news. They don't want to be the focus of news. They just want to be in the background. And they say they have a dual mandate, which is uh, inflation and employment. But part of that inflation, what people don't understand is actually price stability, not just inflation. They're looking for price stability. So they don't want prices to move around wildly, which they have been doing. So in the last year, we've seen inflation as high as like 7 or 8%, the official inflation, the ones that they're actually willing to print. And then right now we're at about 3%, and people are like, "Oh, we're coming down, and it's good, and we should start um, easing off." But if you look at a year ago from now, from where we were, where our inflation is about the exact same as a year ago. And we were saying that inflation was too high a year ago. So we just kind of made this big, huge upward movement and back down, and that's volatility. So that's something that the Fed does not want on their hands, and that's why they're still hanging on to not cutting. So we'll see what the market is predicting. Okay. Yeah, so it looks like we're just shifting more to the 50 basis point cut. I think I've given enough opinions about what I think about that. So yeah, it is, the market is the market. So looks like maybe that percentage is shifting more and more towards the 50 basis point rate cut. I think the market is in for a big surprise come September. I still peg the chances of a rate cut in September as very low. Actually, let's look at the report before I make that comment. Okay, so initial claims, 233 par 249, so less initial claims and less than consensus. But what we really want to see is continuing claims. For some reason, Econoday doesn't give that to us today. Continuing claims, slightly higher, still going up. So not great news that this is still moving higher. So what that indicates is that the economy is weakening. It is a sign that recession is more likely. And if we haven't finished with inflation yet, and we have a recession, and then the Fed has to switch gears to combat the unemployment instead of combating the inflation, that puts us in an environment where you have inflation and recession at the same time. That's called stagflation. We had that in the 1970s, and it was not pretty. And it took really, really high interest rates into the 80s in order to solve that problem. We were over 20% on our interest rates. So I'm not too sure about the next year or so. But in terms of a rate cut in September, this is super optimistic. What I guess this market currently doesn't understand is that the Fed does not want to be the focus. They do not want to be in the headlines, and they don't want to be blamed for anything. They just want to operate in the background. So no matter what, if they take action in September, it's going to be politicized no matter what, because that September rate cut comes about 5 or 6 weeks before the election. And the second they cut a rate, whether it's justified or not, they're going to be in focus. And in this case, it's going to be viewed as favorable for the Democrats. And so they're going to have all the Republicans and Trump on their case about for the next 5 weeks into the election about how they're manipulating. There's no way that Trump would let that go. So then they're going to want to avoid that being in the spotlight and being this at the center of a political debate, because it just makes their life really miserable and a lot more difficult when all that focus is on them. So I really think that if really realistically, they can wait about a month and 2 weeks, a month and a half, and just say, okay, we'll cut rates after the election because now no one can blame them for anything. So most likely, in my opinion, based on observing their behavior over the last when did I start my career? Almost 20 years ago, actually. About 20 years, 19 years. For the last 19 years, I've been observing the Fed, and we actually at PIMCO, we used to have Alan Greenspan come almost every year and give us his opinions, and we were paying him like the firm would pay him $1 million or $2 million to come for 5 days, and we would have our economic forum, and all the portfolio managers around the world would come in and just sit and have this conference for a week. And sometimes it was Greenspan, sometimes it was other people, and actually Greenspan didn't stay for the whole 5 days. We would meet for 5 days. Greenspan would be there for one day, maybe 2 days, and collect his $1 million fee, which is pretty lucrative. But in any case, I've had a lot of exposure and experience with people, the Fed, and their psychology, and I don't think the market is right on this one. So this movement upwards this morning from that jobless claims, I don't think it's going to be lasting. It's sticking so far, but into the trading session, I think we're going to be kind of random. We came down and then we chopped sideways, and that's exactly what we've been talking about. After a huge move, chopping sideways for a few days is appropriate. In this case, this was a larger than usual move, and so chopping sideways for maybe 4, 5, 6 days might be appropriate instead of the normal 1, 2, or 3 days. So here we are, we're opening up over here, and that's still within the chop sideways range, and we're giving ourselves actually all the way from the moving or the VWAP right here up until the MA 100 or the EMA 8 as a narrow range, but as a broader range all the way up to the MA 50. All of that we're going to consider chop and movement sideways. And you can see I drew this additional purple line. I did that this morning because I'm seeing a lot of resistance right here. Or in other words, as long as we're below this purple line, downward pressure is stronger than upward pressure. There is going to be a lot more selling pressure than there is buying pressure. So if we cross this line, then institutions will begin to consider getting excited and buying again. So, but as long as we're below this line, we've got selling pressure. And then actually, as long as we're above that VWAP though, then because we got buying pressure at the VWAP. So unless one overwhelms the other, we're going to stay in this range. So, or I should say, until one overwhelms the other, we're going to stay in this range. This range is good at least till this Friday, maybe till the following Friday. So this line will get updated. It could move around. It doesn't have to stay here. It's not static. So really, it should be evaluated on a day-to-day basis, but it's a little sticky. So it should last at least until this Friday, maybe all the way until next Friday. So we're really just expecting chopping sideways. Let's take a look at the QQQ, see how the futures are helping that. That's there. We're just right back up into this area of resistance. So this is, like I said, this is going to be very tough for it to move through. So we do have a downward bias in the QQQ, and let's just take a quick look at SMH. SMH popping up. Yeah, really not that much. It's where we opened 2 days ago. So there's still downward pressure in the SMH. I'm not going to get excited if we trade up today in the SMH. In fact, it might be an opportunity to add to that short if I was inclined to. I'm not inclined to because we're just taking baby positions right now. As long as we believe in the market chopping sideways, we're not going to lean our portfolio too short or too long. So here, in a normal circumstance, if I wasn't taking a long and short approach, if I was taking a short approach, then today, if any movement upwards would be an excellent time to just re-up on the short. But I'm not planning on doing that at all. Okay, so let's take a quick look at our momentum from yesterday. I don't think we did that. And then we can take a look at the performance of the sectors because we definitely didn't do that yesterday. So we got Hey guys, I'm back on my phone. I lost power in my office, so I my computer is off and I cannot get it back on, unfortunately. So, we're the picture that we've gotten so far is that that chop sideways looks like it's going to continue at least for a couple of days. And so our plan is the same. We're already in a pretty good position. So we're today is going to be basically a wait and watch and see type of day and just see how everything shakes out. But most likely it's just going to chop sideways, in which case it's going to be a pretty quiet day in terms of our activity. Maybe not a quiet day for the markets, but for us, it would be pretty quiet. So this is another good day to just relax. We can watch the markets if we want to, or we can just go and have a coffee and relax a little bit and come back towards the end of the day and see how it goes. So I apologize for not being able to do the full video this morning. I need to figure out why there's no power in my office. Have a wonderful rest of your day. Hopefully everything in power wise is resolved by the afternoon, and I will see you in the afternoon if the power's back. All right. Have a great day, and I'll see you later.